Well, good afternoon, everybody. Welcome back to another episode of the Industrial Real Estate Show. I am pleased to be joined by two guests that I've personally had on this show individually, but it's a real treat this time to have them both on at the same time. Bob Knakal, Rod Santomassimo. Gentlemen, thank you so much for joining me on the show.
Thanks for having us, Chad.
Great to be here.
This will be exciting because we've had the opportunity to do interviews individually, but never at the same time. I know that Bob is a client of Rod's. You guys are very close friends. You've got a book coming out together as well, which we'll talk about a little bit later. But I just thought this would be an awesome opportunity to talk, get Bob's insight as the best broker in the world, and Rod is the best coach in the world. Get your guys' individual thoughts and combined thoughts on what's happening in the real estate market right now, and then even more importantly, what brokers can be doing in a market like this right now. And I guess to frame that, let's just say that there's uncertainty right now. I don't think anyone can necessarily say we're in a recession or it's imminent, but there definitely is uncertainty. With your experience, Rod is coaching a number of agents, and Bob with 40 years in the business. If we're in this market right now of uncertainty, what should brokers be doing right now?
Okay. BK?
Well, Chad, clearly in any market, brokers have to be aware of their market presence initiatives. Got to be making your calls, get on the phone, talk to people, and try to absorb as many data points as you possibly can in a market where there's uncertainty. Try to figure out what people are doing, why they're doing it, what's motivating them. And certainly when you're representing sellers in a sale transaction, you always want to be looking for motivation, but more importantly, in uncertain times, when you don't know where you're going to be in the next 2 or 3 months, when the rubber's meeting the road, or whether you're going to make a deal or not, you want to be working with folks who are motivated to transact. But I think it's really important to stay on top of the market, look for insights, look for indications of what's going on. Look at every sale transaction that's happening, and try to really understand what were the pushes and pulls in that particular transaction. Why did it happen? What were the circumstances surrounding the seller, the circumstances surrounding the buyer, and try to glean as much as you can from each and every data point, each transaction. Try to understand the market as best you can. When you understand it, you can articulate that to the client. And when you articulate that to the client and give them the benefit of the insight, they can make more informed decisions. And at the end of the day, that's ultimately what we want to do, is put our clients in a position to make the best possible decisions they can.
Yeah.
Very
And
well said. Can I just ask one follow-up question, then I'll get to you for your response there, Rod. When you say dig into all the data points, how much time or what goes into it if you see a property that's sold? And I'm guessing that you're very familiar with the market on all the buildings anyways, but if you weren't involved in the transaction, another broker, another buyer that you didn't know, how much work do you spend trying to figure out that transaction?
A tremendous amount. Understanding the transactions is understanding the market. And so even on transactions where we're not the broker, fortunately, I have good relationships with a lot of the brokers who do sales in New York, so I can call them up and we share information. But I call the buyer and seller of every transaction. Certainly on the development site side, I call the buyer and seller of every deal and try to get perspective. And a lot of times you have to triangulate, because the buyer wants to make the deal look less expensive than it might have been. The seller wants to make it look more expensive than it might have been. So sometimes you have to do a little digging and try to triangulate and figure out what the reality is. But very, very important to really understand what each transaction was, because after all, that's the market.
So that's a great tip for anybody listening right now, is that every sale transaction that's in your market, don't just rely on the data that comes across your desk. Call the broker, call the buyer, call the seller. I think that is such a great tip that I suspect very few people actually do. So that's the first Knakal nugget. I'm sure we'll have more in the call. Rod, sorry to cut you off there. Please go ahead.
No. So the question was, what do you do when there's uncertainty, right? And BK, his last part of his answer was dead on straight, right? Our role as transactors or facilitators that our clients are and that brokers are is to educate our clients, to put them in position to make a more educated decision. That's it. If we force a sale or a lease or a refinance, that's not the role of a true authority. So in a market of uncertainty, people are looking for certainty. That's what it is. That may not be available, but what is available is more clarity. And that's where I think most brokers assume their parties understand the market as well as they do, which is totally incorrect. It is. It's a huge misinformation of assumptions there. But so if now I have to, so say, Chad, if you're in Vancouver and you're not sure about the warehouse market, and or whether you're in Seattle or Tampa or New York, my role is to provide you with all the information and then actually laying out 3 options of the scenarios that what could likely happen based on my knowledge, historical knowledge, and what's going on, right? And then you should know every single broker must know what are the 3 questions this particular prospect in this situation are thinking right now. They got to know this. They got to know that answer. So and Bob knows all those, but if you're going into a meeting with a client who has uncertainty, you got to prove to them straight off the bat that you know who they are, you know what they're dealing with. And the way you do that is say, look, inevitably when I meet clients like you in this situation, they have one of these 3 questions. 1, 2, 3. And they're all going to be different based on the situation. And then they're going to realize, damn, you're the expert. You're giving me comfort and confidence that there is a future path to my situation. That's what you got to do.
That is wonderful advice. And I want to dig into that with you further, Rod. What are some of the things that you see agents mistake that maybe mistake is a misnomer. Maybe it's just that they don't optimize. Maybe if they said something a little bit differently, maybe it isn't a right mistake. Maybe it's just something where like, do not say that. That's like first, do not say that. But what are some of the things that they could optimize?
Yeah, we don't have time in this podcast. If it's a 10-day podcast, to go through every mistake that brokers make. But I will say this, and I learned this. There's a gentleman who owns a very large successful construction company in New York called Frank Siami, and I'll give him the credit here for this one. My father used to consult with Frank, and Frank taught me early on that when markets are slow or bad, right? And look, this is not a bad market. This isn't a bad market. I mean, think of the great financial crisis. Think of the Great Recession. Think of the pandemic. Those were bad markets. They were. This is just a cycle. But when things get slow or bad and there's uncertainty, for the love of God, please double down on everything you're doing. Prospecting, marketing. Don't hide. Don't panic. Don't become petrified. This is the time to get out there more than ever before. Work harder. Work longer. Sorry, it is. Or you'll be left behind. Do that. Most brokers won't. They panic. They don't do anything. They blame the market. Authorities don't blame markets. Authorities make the markets.
Those are wise words. Bob, I want to go over to you. It was building sales, 2,348. Is that where we're at?
2,349. We did an air.
Congratulations. Congratulations. That's exciting. What have you learned over those 2,349 transactions? Are there repeatable patterns that you observed from building number 1 to the last one that you just sold? Or how have things changed over that timeline?
Yeah, well, Chad, I will tell you, I always say the business is a very simple business. It's just very, very difficult. And the business fundamentally really hasn't changed all that much in the past 41 years. It's the same basic business. Certainly we have different strategies and tools and technologies that we use today that we didn't have back in the old days, but effectively it's the same business. And it's a matter of always trying to increase probabilities that things are going to go your way. There's nothing in the world that is 100% foolproof. I guess there are things that are 100% that won't work for you if you don't do them. But certainly with regard to success, all we try to do in each and every way is try to increase the probability that our client's going to get a great result. And the way you do that is by taking advantage of all the different tools and strategies, tactics, technologies, everything that you've learned in the past, and try to apply them to the current situation. You look for patterns with respect to what buyers will do at certain moments in the market, what sellers will do at certain moments in the market, and just try to put your client in the best possible position for a favorable outcome. But the reality is things haven't changed all that much over time. It's still very, very a market that is very dependent upon your relationships with people, how you encourage them to understand the market so that they can make good decisions. If you think about all we're doing is trying to get a switch inside our client's head to go one direction or another. And best way to do that is let the market speak for itself. You mentioned mistakes brokers make sometimes. I will often hear brokers say, well, nobody's going to do that. Or, everyone thinks the price is too high. You know what? That is a kind of a very weak way to try to convince an owner. But if you say, Joe, who bought 3 buildings last year, said the price is too high, and Fred, who owns 18 buildings in the neighborhood, said the price is too high, and Sally, who just raised $100 million of equity and desperately is looking to put it out, said the price is too high. All of a sudden, you're giving tangible feedback. The market is saying it's too high. You're not the one saying it's too high. So you have to certainly do the job the right way, get as much feedback as you possibly can, let the market speak for itself. And that's really the best thing we can do to help our clients make the best decisions, is give feedback from market participants who are really active in the market. And, that means getting feedback from people who are logical buyers. I tell my guys all the time, look, if you spoke to a developer and that developer said, well, I'm not interested in that great site in Manhattan because I only buy in the outer boroughs. My answer is, why the heck are you calling a guy who only buys in the outer boroughs? But we want to get feedback from the people who are buying in Manhattan, because that feedback is a lot more germane to the actual way that property is being perceived in the market, how it's being received. And that will be much more tangible feedback for the client to base a decision upon.
Very well said. Can you go into a little bit more on when you're calling, because I know that you call 12 to 14 hours a week. When you're calling, do you always have a goal in mind on what you're looking for? Like, is it to see if somebody wants to sell, or is it just, are you looking for feedback? Are you trying to get some information? Are you trying to get some data? Do you have a breakdown of what your intent is based on the calls, or does it move and flow based on who you talk to?
The answer is yes. No, number one, the one main objective is always to find out if somebody wants to sell their property. That's why we're making calls. But there are several other things that you can get out of that. First of all, as Rod has always taught me and teaches everybody, you have to call offering something of value, offer to share something of value with the client, so they're interested in talking to you. But there are a million things that you can get out of the conversation. What is the client currently doing? How are they looking at the market? Where do they see opportunities? What are the challenges that they're facing now, and why are they challenges? What's next for them? What are they looking to do next? And you try to understand the client's portfolio before calling them also. It is a dramatically different call. If you own several properties, Chad, and I was prospecting, calling you, and we're talking about the market, I offer you a market report, or do you want to share something about the market with you? And then I get around to say, oh, by the way, do you have anything you want to sell? Or I say, hey, Chad, I walked by your property on Main Street yesterday, and I noticed the store is now empty. What's happening there? You're probably going to give me a whole song and dance about why the store is empty and what your plans for the building are. And we'll start talking about that. And I'll say, oh, similar thing that happened to your property over on East 4th Street. And all of a sudden, you're having a real granular conversation, getting so much more information out than if I just said, hey, buddy, I don't know anything about what you own, but anything you want to sell? That's like any schlub could do that. So understanding the what the client has, understanding their portfolio, and then having some really valuable information that you can share with the client. For most folks who own real estate makes up a fairly substantial portion, if not all, of their net worth. And so they should be interested in things that are happening that are going to impact the value of those assets. And so often market information is a great thing to share with them that could give them some insight into how their net worth is doing that day.
So that's Knakal Nuggets 2 and 3 for anyone keeping track. Thanks for that. That was fantastic. So with that in mind, I want to shift over to Rod. And even though the fundamentals, as Bob has mentioned, are the same, you need to be getting in front of people, you need to be prospecting, you need to be offering them value. There are a lot of tools out there now that are complementing what a broker can do. And you're probably the foremost expert right now in AI for commercial real estate agents. Can you, let's put it from the perspective that someone that has heard of it, maybe they've used ChatGPT or Grok or one of the other ones, but they haven't really found much value beyond what people would commonly expect for it right now. What is the potential of AI as you see it right now for the broker on the street?
Yeah, great question, Chad. But before I answer that question, you probably saw me pick up my phone and do a calculation. So we take things for granted. Bob just said he sold 2,349th building. Okay, let's do the math. Bob, how many years? 41 years?
41 years.
Okay, how many weeks in a year?
52.
You know what that average is, Chad, on buildings sold per week?
Is one per week?
1.107 buildings per week over a 41-year tenure. I mean, let's put the number and magnitude of buildings sold into perspective. I love podcasts. I listen to them every day, and we shake and go, yeah. Oh, excuse me. Excuse me. Alexa, stop. Chad, I hope you can edit that out.
Yep.
So just put that in perspective. I think we just go, okay, so but to put that in perspective, how many companies sell one building a week? I mean, think about that, right? One building a month. So the number is astronomical. It's just unfathomable to think a broker in our history would sell a one building a week. It's incredible. I'm not kicking Bob's ass because I never do that. I always kick his ass. But just folks, listeners, put that in perspective, what he just told you. Now, AI. Yeah, it is absolutely the greatest accelerator of our lifetimes in regards to how it's just the transformation of how brokers are going to broker is unlike anything we've ever seen. Forget the cell phone, which is amazing. Yet there were times we talk about in the new book where Bob would hoard quarters to the corner to make calls, right? So we had cell phones and fax machines, and then the internet came. That was amazing, right? But AI, and if you're not using AI every day for market research, for prospecting, for social media, for communication, for analysis of leases and orchestration, and very soon financial analysis, that is now coming. If not, in some tools, it's good, not great. You should be doing all that. But this is what I'm most excited about. We just hung up a phone, which is my last conversation with Bob a few hours ago, and now, so right now, the greatest thing, Chad, is going on is everyone's developing agents to help run their business, right? It's here. It's here right now. So you will have agents. Every commercial real estate broker, yes, use chat, use Claude. Create your own apps on Claude in 5 minutes for your clients. Personalized apps for your clients, for your opportunity. You can do that on Claude Anthropic in less than 5 minutes. ChatGPT, use the deep research tool. I used it the other day. I was trying to get this person's phone number. I scoured the internet, couldn't find it. Chad, I used the AI deep research tool. I know you get only 10 a month on your allowance, but I use it for that. It gave me the person's personal Gmail and their home phone number. Imagine that, right? And by the way, I talked to him in an email. I'm meeting him in Vegas during the SAR conference, a couple of weeks. It's just incredible. But here's what's going on. Agents. I will have in my company an agent for my sales team, as all brokers should, that will dissect every call through a template, through a framework, rate the calls, understand the follow-up emails, look at the prospect, their history, what exactly to write, customized to them. Those are being developed right now and will exist in the next 3 months. Same with marketing. Personalized marketing messages to your clients are going to happen within the next 3 months. On your finance side, your operations side, your tech side, agents are where it's at right now. They absolutely are. And it's just changing the trajectory of everything we're going to do. I wrote a blog this morning. It's coming out this weekend. And everyone says this. You're not going to lose your job to AI. I hope not, because I coach brokers. I don't want them to disappear, obviously. But if brokers aren't leveraging AI every single day, you are going to become obsolete and you are going to disappear. That is going to happen.
That's probably a scary thought for everybody on the full spectrum of careers, from Bob at 41 years in the business, I'm 20 years in the business, to someone that's perhaps thinking of getting into the business. That's a scary thought. That
well, let me interrupt you because the real estate business is based on two things, and it's not a real estate business. Bob, what's the real estate business based on?
The real estate business is not the real estate business. It's the information and relationship business.
And so, Chad, AI will take care of the information. It will, but you need someone to go out and get the information. You can't create the Knakal map room based on AI. You cannot, at least not yet, right? And you can't have the relationships through a bot, at least not yet. You can't. So we don't see brokers dissolving so quickly. We don't.
So what does a broker do to double down on the relationship side right now?
BK?
Well, I think you have to be there for clients. You have to make sure you're in touch with them regularly, sharing information with them. You know, in New York today, we're in a very, very unique set of circumstances where we have different market sectors are moving in different directions at the same time. This has never happened before. So everybody's trying to figure out what the heck is going on. And we have this added complexity of having an interest rate environment that is very, very different from where it was when most of the existing mortgages that are maturing were made. That's adding a layer of complexity. So people are looking for guidance. They're looking for a trusted advisor that really can give them good advice about what to do. And I have to tell you, I'm telling more people today not to sell than I'm suggesting they do sell, because I think really for a majority of property owners today, it's not a good time to transact. For others, it's a great time to transact. But, you know, that's where understanding the market, understanding what types of properties are being well received and values are going up with, what types of properties values are going down on, is very, very important. So I think to further that relationship and strengthen the relationship, have a lot of great advice that you can share with a client, share it with them, give them the advice you would give to your mom or dad if they own the building. And you can't really go wrong that way. And I think people appreciate the fact that you are giving them advice that you really believe is the right advice, not that you're just looking to make a quick deal.
Yeah, very well said. Going back to the adoption of AI, and Bob, you've done it 41 years. I've done it for 2 decades. It's tough to pivot and make radical changes to your business when you've done things one way for so long, and all of a sudden this new technology like AI comes out of the blue, where that wasn't on anyone's radar a few years ago, and now it's front and center, and we're all being told that it's the next thing that we need to incorporate. How do you, and I think this is a lot easier for the younger generation. I think new brokers coming in, they are very quick to adopt. How did you say, okay, it's here, I'm going to learn it, I'm going to figure it out, when there's almost an inherent stubbornness or just general resistance? I know I have it on certain things where I'm like, I don't understand, this is way above my head. How did you realize that it was so important and then learn about it and dedicate the time required to actually implement it into your business?
Well, it was very easy for me. I just called Rod.
No, I'll answer for Bob and I, and then I'll have Bob come back. Bob and I did the smart thing, right? So, for example, Bob and I don't do our own taxes because we're not very good at it, right? But Bob's a numbers guy. So we both have tax strategists. We do, right? Because they know what to do for certain situations. Same with AI. 2.5 years ago, some kid named Connor Cadell called me. I knew him already. He introduced me to ChatGPT. And so I hired him full time, and now he's my director of innovation. Bob did the same thing with a guy named Seth. Seth is his AI guy. You know, we're old guys, Bob and I. We're in our 60s now. So we don't have to learn AI. We need to engage and align our team with AI knowledge bases that people have. That's how we do it.
Yeah, read Benjamin Hardy and Dan Sullivan's book, Who Not How. The main thesis of the book is when you have a good idea and you say, wow, that's a great idea. How am I going to do that? You're asking yourself the wrong question. It's, hey, that's a great idea. Who am I going to get to do that for me?
Great point. I do have that book. I'll have to, I haven't read it yet though. So I'll dust it off and get going. On the topic of book, that's perfect time to switch to that. You guys are writing a book. First of all, when's it coming out? When's the book out?
BK?
It's coming out. We have our book launch party on May 20th in New York City, and really looking forward to it. It's been, I guess, about 3 years in the making, Rod. We've been working on the book.
Yeah,
We've
so this is important.
Printer, and it will be out very soon.
This is important. We unlike some of the books I've seen lately, there is no AI in this book. We just spent 2.5 years planning it, digesting it, rewriting it too many times, frankly. but so it's finally out. It'll be out May 20th. And yeah, for everyone listening, we're having a big launch. You'll be able to buy it on Amazon. We'll tell you when. But come to New York if you want. We're actually going to have 300 people come to New York, and 100 of those people will be with Bob and I for 4 hours in advance. The first time Bob's ever done that, talking about masterclass on brokerage, and then they'll join 200 other people. It could be any listener on this call to our launch party. We're having some really amazing things happen at the launch party as well on May 20th.
Oh, very cool. It's too bad it's the 20th and not the gala weekend, because otherwise I would love to have tried to sneak into that. What was the impetus? Selling Buildings is the title of the book. What prompted you guys to come together on this and write it?
I'll let Bob start.
Well, I've always wanted to write a book. I've toyed around with it for a long time, but when do you have time to do it, or how do you get started? Rod, having written several best-selling books in the past, was the perfect one to do it with. And what I really wanted to do was not have it be basically the Bob Knakal life story. It basically surrounds the progression of my career. But as much as I love to tell stories about transactions that we've worked on and what really happened with the buyer and seller and that kind of thing, I really wanted to kind of take folks on a journey with us regarding each of the different stages that I've gone through, from the early days, starting at CBRE and then starting Massey Knakal, and the trials and tribulations of owning and running a business, from starting with two guys and a secretary up to 250 people, and the different inflection points that we met. Several times we were at forks in the road that had profoundly impactful results for us had we gone one way or the other. So I share all of those times and why we made the decisions we made, how they worked out. And then during each of these phases, we've gone through different market cycles, different things were happening, different growth stages for the company, and transactions we were doing at the time that were both very illustrative of what was happening with the company and what was happening in the market. And then adding on Rod's perspective from somebody who's seen thousands of brokers go through all kinds of circumstances, and then dissecting each of these things that happened along the way. And kind of I'm giving the granular details of what happened inch by inch as we went through this, and then Rod's kind of taking the macro perspective. And the book is chock full of lessons for brokers, for investors, things to do, things not to do, why to do them, why not to do certain things. And I think folks will really get a lot out of it, because I think there are a lot of lessons in the book based on the successes that we had, the failures that we had, the ups and downs, and that's what life is, a bunch of ups and downs. And so this book kind of articulates what we were going through at each of those points, and Rod gives some great perspective on the different things and how they apply very broadly.
Very cool.
Yeah, and if I could add to that, so look, I've written, this is now my 5th book, and 5 is my favorite number, as some people know, and I love number 5, so it's appropriate. Why not do it with one of your closest friends? It's pretty cool. But the story is, while it is a story about the Bob's career and progression, but that's just a thread, a common thread in the book itself. Bob and I wanted to make sure that the subtitle is maximizing prices and profits in commercial real estate. So the first end, how do we make a book that's valuable to investors to understand how to position their property to maximize their price, and also all the things that can go wrong? Because in Bob's deal stories, a lot of things that go wrong. They do. A fire the day of closing in the building. That's something that can go wrong, right? A brother and sister who hate each other and refuse to sell. What could go wrong, right? So all these stories in the book. But beyond that, so now we focused on the investor. So the investor could read this and say, okay, I understand what could go wrong, how to prevent things, how to address these things and navigate these obstacles. Bob shares that with the investors. And for me, I'm sharing with the brokers, okay, based on this trajectory of Bob's career, how did he build this business from 3 people to 200 plus people, right? How did he become the number 1 broker in New York City and beating out gigantic firms like JLL and CBRE? How do you do that? And then how do you deal with the day-to-day operation and stress and challenges of being a broker? So that's that part of the book. Be careful. The book is not about, this is how to do due diligence, this is what you say in a pitch. That's not this book. This book is about real life and real estate. And that's why I know it's going to resonate so well with our targeted audience.
Well, it's such a great combination because you have Bob, the broker and expert on the street, and then yourself, Rod, as the strategy guy. So it's a very interesting duo that you guys put together. And there's one chapter in particular that I just want to get your thoughts on. And I think that this illustrates that you've gone through a lot of challenges being in New York City. And there's a chapter on 9/11. Can you talk about that, just on what that was like? Because that we teed the beginning of this conversation off that we're dealing in a period of certainty. What we're dealing with now is nothing compared to what happened that day. Can you tell that story in both your words?
Sure, Chad. Well, one of the many big inflection points that really was that, and that probably was the biggest inflection point we had in terms of a fork in the road and deciding what to do. So we'll set the stage. Not only did we have 9/11 happen, you had a nationwide recession going on. You were on the heels of the dot-com bubble bursting, the Russian credit crisis. A number of things were going on at the time. And right after 9/11, just about every company was downsizing, so especially in the real estate business. But law firms were downsizing, accounting firms were downsizing. And Paul and I looked at each other and said, okay, we have 21 people now. We're almost full in Manhattan. We were eyeing the outer boroughs. Do we make that move? Do we not make the move? And it occurred to us that there were so many great quality people on the street looking for work. Companies were downsizing. We believed in New York. We believed in the future of New York. We believed New Yorkers were tough and would bounce back. And so we went out and hired a director of HR. Up to that point, we had been interviewing everyone ourselves, but we hired a director of HR and said, go out and hire everybody you can. All these great quality people, brokers that were laid off, attorneys that were laid off, accountants that were laid off, folks who were either directly or tangentially related to real estate or sales. And we said, let's go hire these people. And what happened was that 2 years later, we were at 150 people. So we hired about 125 people in 2 years. We had opened the Queens office, opened the Brooklyn office, staffed those offices up. So by 2003, when the market started to show signs of life again and things were picking up and companies were saying, hey, why don't we start thinking about hiring people again? And hey, these outer boroughs look kind of interesting. And, they were just starting to put plans in motion. We already had people with years of experience and boots on the ground in all these markets. And then by '04, when the market really was just crunching along, we were perfectly positioned to take advantage of it. So our 2004, 5, 6, 7, just unbelievable years. And that's really when, we had some of our best years from '01 to 2014, when we sold the firm. According to CoStar, the number 2 company in New York had sold about 1,300 buildings. We sold over 4,000. So we lapped the field by more than 3 times. But in those years, particularly '04, '05, '06, and '07, we were many years 4x the competition. And it just was a very, very counterintuitive move. Had the market not come back, we definitely would have been out of business. But we just had an unwavering commitment to New York and an unwavering belief that the city would bounce back. And luckily for us, it did.
So let's dissect what he did, okay? Because it's so important for the audience, whether you're an investor or a broker, understand this. So the worst thing in our history, from a tragedy level, occurs right from a countrywide national basis, in our lifetime. Take Pearl Harbor aside, in our lifetime, it happens. And what we all do, again, uncertainty. What's going on? If you're committed to what you're doing and your livelihood and your career and your organization, you're not thinking in terms of next week, next month, next quarter. You're thinking in terms of 3 years from now, 5 years from now. Where do we want to be? And that should be your perspective, by the way, whether the market's good or bad. It always should be. So you have such conviction and commitment that what you're doing is right, that what you're doing is going to work, that you're willing to invest at the worst possible time, right? Think about it. What if the market didn't come back? What if a terrorist attack was that was the beginning of a world war? We had no idea. In hindsight, it was a horrible day. It was. But did we know that on 9/11? We didn't. We didn't know it was going to happen. But take the next several months, still that shadow was there. And it's for everyone. You got to figure out, am I committed and convicted to what I want to do, where I'm going to go all in? And this is not the only time, by the way. In the book, you'll see there are many times Bob goes all in to think about, 3 years, 5 years from now, I'm committed to this, passing up on millions of dollars in offers to say no, only to later on do something different, or getting out and grading credit cards. Bob did. You learn that in the book too, just to make payroll, right? So conviction, commitment to your audience. Do you have that? Do you have the long-term perspective that I'm going to make this work? Or it is, I'm going to blame this event for this, and I'm using an excuse and justify why it didn't. I think, if anything, that's what you got to walk away with that one for.
That is profound. I think that is such a great lesson for people to look at. We get into this loop where everything seems to be on that weekly basis, or maybe it's monthly, or maybe it's quarterly. Anyone that's following stocks knows the quarterly grind that comes with having to make earnings, and how especially like a REIT. I've always found this so funny, is that a REIT gets valued on a quarterly basis, even though they're making decisions that are 5 years out. That's always been interesting to me. I love the point about thinking that you have to be looking out 3 to 5 years, because there's always ups and downs. Great financial recession in 2008. Then we had the pandemic in 2020. Did you go through the savings and loans fiasco too? Was that something?
Sure did. Early 90s. That was, as Rod alluded to, we ran the company on credit cards for about 3 years. I personally lived my life on credit cards for 10 years, 1988 to 1998. If I didn't have credit cards, I wasn't existing. So it was, And I look back on those times and I say, how did I not, how wasn't I pulling my hair out every day? And I just was, I guess, so used to it. I was a little bit immune or numb to the circumstances, but we always had a belief that what we were doing was going to work. We always loved what we were doing. And you know, lots of inflection points and lots of times along the way. And that's what the book really talks about is, you know, these times when you have to decide, do you pay 1/3 of your nest egg to for the next 3 months to live? Do you pay everything next month and hope things get better? Do you go out and get credit cards from every bank in town? You know, what do you do when you're faced with these circumstances? And that's what we try to convey in the book is you know, putting you in the room with us when we were going through those decision making processes, and understanding what was going through our mind. We made plenty of mistakes, hundreds of them. You know, made some good decisions, and it's been a great run so far. And I say so far because I think I've got a long way to go, and with Rod's help, a lot more to accomplish. But you know, the book gives you a good sense of what the ride's been like for the first 40 years.
The conviction is such a powerful note. When I first started, I remember it was so tough the first year, but I was so stubborn and I just said to myself, I'm just going to find a way to do this. And that conviction is what got me through. Is conviction something you have or you don't have? Or how do you grow conviction? How does someone that is, and maybe we could all put ourselves in the shoes of that first year broker who's unsure if he can do it. Maybe he's getting flack from his senior brokers all the time. He doesn't feel that the pieces are all coming together. Can you grow conviction, or what do you do, or what do you say if you're that first year broker struggling to make it a go of it?
Well, BK, I'll let you take this, and then I'll give my input.
Well, Rod, I was actually going to let you take that because
Okay,
you've
I'll take.
spoken to a lot
Yeah,
more folks than me. And Chad, I apologize. I should have mentioned this before, but I have a hard stop at 2:50, so I've got five
Yep.
more minutes. I just want to make sure, in case there was something you wanted to make sure you got to, I didn't want to have to get off abruptly.
so I'll be quick and let you ask Bob the final question, Chad. And we really appreciate your opportunity to be with you. By the way, you're an incredible broker, and you have conviction. We love everything you're doing.
Thank you.
Really quick, I don't care if you're a first year broker or a 40-year broker. It's just this conviction comes, and I have conviction. I truly believe to my core that I'm the best coach in commercial real estate brokerage on the planet, and no one can convince me otherwise. I know I am. I know it. I bleed it, right? True. Bob knows in his heart that he's the best freaking, and I'll say freaking to be nice, best freaking broker on the planet. And he knows it, right? You can get conviction through having the confidence of the repetitions. Go out and get as many reps as you can. And then, yeah, read your success stories, read the endorsements, read the testimonials. Remember and repeat to yourself, you are good. You are great. Get the conviction, because when you're on a call, if you don't show that, if you don't have the confidence on a pitch or a prospect call, your investor prospect's going to see it and feel it and say, you're not for me. You're not. So first, fake it till you make it. What the hell? Go for it. After that, you'll earn it. Bob?
Yeah, no, I agree. I think you have to have belief in yourself. You know, it's like you hear great athletes talk about all the time that they picture themselves sinking the putt. They picture themselves hitting the free throw. They picture themselves hitting the home run. And I think you have to be in that moment. You have to see yourself succeeding, and master your craft well enough so that you know what you're doing better than anyone else. And just I think that confidence with combined with a very optimistic attitude and showing a little excitement and enthusiasm is a tough combination to beat.
So, quick one. So, Rory did not show conviction on the 18th hole, but in sudden death, the conviction came.
he showed it at the end, at the time that mattered. So yes, that's a good point. Okay, well, we'll wrap up there, just to be respectful of your time, Bob, and give you a couple extra minutes. But I just want to close by saying I love the conversation, as I always have every time I have the opportunity to chat with you guys. Bob, in my mind, you're the GOAT in brokerage, and Rod, you're the GOAT in coaching. So you've got a fan in me on both regards. I will be buying copies of those for myself and to give out. So I think I have all 4 of your other books as well, Rod. So one of these days I need to bring them and get you to sign all of them. So
come to New York.
Yeah, well, I think I'll see you in New York. And are you going to the gala?
I am. I'm going to the gala.
I'll see you at the gala, and then I'll see you at Vegas and SIOR as well. So we'll have an opportunity then. So a big fan. I will be recommending that book a ton when it comes out. And gentlemen, just want to say thank you once again for sharing your insights.
Chad, thanks so much for having us.
Good luck, buddy.
Okay.
Take care. Bye-bye.
Thanks, guys.